Good morning and welcome to T-Hub Capital, the Investors Lounge, the podcast where we explore financial market dynamics, emerging trends, and the insights that shape successful investments. Each week, we'll delve into the strategies and analyses that drive our investment decisions. You'll get an insider's perspective on the factors influencing markets and the potential winners and losers of tomorrow. Subscribe to the podcast to stay ahead of the curve and make informed investment choices. Enjoy listening.
Euro markets rally. Decoding inflation, rate cuts and economic data. The Pan-European Stocks Europe 600 index closed last week up 2.37% in local currency terms. This surge was mirrored across major European stock indexes, with France's CAC 40 climbing 3.75%, Germany's DAX gaining 3.41%, Italy's FTSE MIB adding 3.36%, and the UK's FTSE 100 posting a solid 3.11% gain. The driving force behind this rally? Hope. Specifically, hopes that slowing inflation on both sides of the Atlantic will give central banks the green light to continue cutting interest rates this year. Now, let's take a closer look at the UK. Inflation data surprised to the downside, with annual consumer price growth unexpectedly slowing to 2.5% in December, down from 2.6% in November. This sparked optimism that the Bank of England might cut rates as early as next month, with February being the most probable date. Even more encouraging, underlying inflationary pressures also eased. Services inflation, a key metric watched by policymakers, dropped to an almost three-year low of 4.4%, and core inflation, excluding volatile food and energy prices, declined to 3.2%. But it's not all rosy in the UK. While inflation is cooling, the economy is still sputtering. Gross domestic product, or GDP, grew by a meager 0.1% in November. Sure, it's a recovery from 2 months of contraction, but it fell short of the 0.2% growth that economists had predicted. And here's a concerning sign. Consumer demand remains weak. Retail sales volumes are estimated to have fallen by 0.3% in December. That's right, during the crucial holiday shopping season, following a tiny 0.1% increase the previous month. Analysts were expecting a 0.4% increase. So, a mixed bag for the UK. Good news on inflation, but continued worries about economic stagnation. Crossing the channel, let's head over to Germany, the Eurozone's economic powerhouse. The news here is less encouraging. The German economy shrank by 0.2% in 2024, marking its second consecutive year of contraction. The main culprit? A decline in investment. While increased private and government consumption provided some cushion, it wasn't enough to offset the drop in investment activity. Finally, let's turn our attention to the European Central Bank. The minutes from the ECB's December meeting, where they reduced rates for the third time in a row, suggest a cautious approach to future rate cuts. The message is clear. Gradual and cautious easing is the name of the game. The market seems to be pricing in another quarter-point reduction in the deposit rate to 2.75% at the end of January. Now our insight into alternative markets, Italy's mid-market surge, unpacking the private equity boom. Italy's private equity scene is making headlines, and for good reason. We're seeing a surge in deal activity, but with a twist. While the number of deals is booming, the overall value of those deals has dipped. What's behind this intriguing trend? According to the latest AM&A barometer, it's all about the mid-market. Let's break down the numbers. In 2024, private equity funds were involved in a whopping 606 transactions in Italy. That's 44% of all M&A deals in the country, a noticeable jump from 40.3% the previous year. But here's the kicker. The total value of those payback deals was €30.4 billion, down from 65.7% of the total market value in 2023. So, what gives? More deals, less money? The answer lies in a strategic shift towards the Italian mid-market, those small and medium-sized enterprises that form the backbone of the Italian economy. Think family-owned businesses, often leaders in their niche, but perhaps facing challenges with succession planning or international expansion. Now, why is the Italian mid-market so alluring to private equity firms? Well, imagine a landscape dotted with these hidden gems, companies with strong potential but maybe lacking the resources or expertise to reach the next level. That's where private equity steps in. First off, Italy has a vast number of these SMEs. We're talking about a fragmented market, ripe for consolidation. Second, many of these businesses are family-owned and facing a generational shift. The founders are looking to retire, but the next generation might not be ready or willing to take over. This creates a perfect opening for private equity to acquire, professionalize, and grow these companies. Then there's the untapped growth potential. Many Italian mid-market firms are ripe for expansion, both domestically and internationally. Private equity firms can provide the capital, the strategic vision, and the operational know-how to unlock this potential and transform these local players into global contenders. And let's not forget about valuations. Compared to larger, more visible companies, these mid-market gems often trade at more attractive prices. This allows private equity firms to acquire them at a discount and then generate significant returns through operational improvements and strategic growth initiatives. Another key factor is the relative lack of competition from strategic buyers. Large corporations tend to chase bigger fish, leaving the mid-market playing field relatively open for private equity. Add to that the specialized expertise of many Italian pay firms, who understand the local market nuances and have built strong relationships with entrepreneurs, and you have a recipe for success. The Italian government has also played a role, historically introducing programs to encourage private investment in SMEs, further sweetening the deal for private equity. And finally, many of these mid-market companies are sitting on a gold mine of export potential, waiting to be unlocked by firms with the right international networks. Now, let's talk about a crucial piece of this puzzle: add-on acquisitions. These are deals where a portfolio company acquires another business. In 2024, add-ons accounted for a massive 45% of all pay deals in Italy, up from 32% the previous year. Why the surge in add-ons? It's all about strategy, specifically the buy and build strategy. Think of it like this. A pay firm acquires a solid platform company in the mid-market. Then, they use that platform as a base to acquire smaller, complementary businesses. This approach offers several advantages. First, it creates synergies. By combining similar businesses, you can streamline operations, cut costs, and expand your product or service offerings. Second, it's often less risky than acquiring a completely new platform company. The existing management team is already in place, familiar with the industry, making the integration process smoother. And then there's what we call multiple arbitrage in the finance world. Basically, larger companies tend to be valued at higher multiples of their earnings than smaller ones. So, by building a bigger entity through a series of acquisitions, private equity firms can often secure a higher valuation when it's time to exit their investment. Of course, success in the Italian mid-market isn't just about spotting opportunities. It requires a specific set of capabilities. Deep local knowledge of regulations, business practices, and cultural nuances is crucial. Strong relationships with family business owners are essential for building trust and securing deals. And the ability to bring in operational expertise to professionalize management and drive growth is a key differentiator. Finally, having a strong network of local banks, advisors, and industry experts is invaluable for sourcing deals, securing financing, and conducting due diligence. And while the Italian market for private exits may be less liquid than public markets, there's a growing appetite for well-performing mid-market companies, opening up diverse exit opportunities. So, what's the takeaway? The Italian private equity market is experiencing a dynamic shift. The focus on the mid-market, coupled with the rise of add-on acquisitions, reflects a strategic approach to value creation in a fragmented, opportunity-rich landscape. Private equity firms with the right expertise and networks are well positioned to thrive in this environment, unlocking the potential of Italian SMEs and generating substantial returns.
Thank you for listening to this episode of Hub Capital, the Investors Lounge podcast. I hope you found this content interesting and inspiring. If you enjoyed this episode, don't forget to subscribe to the podcast so you don't miss a single episode, and share it with your friends and colleagues who might be interested. To learn more about T Hub Capital and our activities, visit our website, hubcapital.com. You can also follow us on our LinkedIn page. See you soon. All the best from the T Hub Capital team.